Financial markets are simply markets where people trade financial securities, shares, futures, options, and other kinds of investment instruments. They've been around since Stone Age man traded volcanic glass to make his first tools, developed in the Middle Ages, when rulers traded debt to finance their adventures. Now the term Forex trading refers primarily to investments in currency pairs, and today's trading platforms enable traders to invest in Forex, CFDs with shares, indexes, and commodities as well. Investing in a currency pair's exchange rate, such as the euro versus the US dollar, or the euro-US dollar currency pair and the Great Britain pound versus the Japanese yen, is like converting your home currency into a local currency when traveling. Currency pairs are referred to by two sets of abbreviations. The first three letters refer to the base currency and the second to the counter currency. The value of the pair refers to the amount of counter currency you need to exchange for 1 unit of base currency. CFDs allow you to trade commodities. Commodities are basic materials we use in everyday life for food, clothes, any kind of consumer or industrial material such as gold, cocoa beans, wheat, cotton, and natural gas. To be a commodity, an asset must satisfy a market need and it must be fungible. That is, each unit of the commodity class must be exchangeable with another unit since the characteristics of the asset are the same. CFDs also let you trade indexes. Indexes are asset groups that provide investors with a broad picture of how a sector or an economy is performing. The S&P 500, for example, is a U.S. stock index that examines the shares of 500 of the largest companies in the U.S. Housing indexes measure the housing sector. Consumer product indexes measure consumer product and service prices. Sentiment indexes measure the feelings of people towards the economy, and so forth. Since indexes are abstract entities, they cannot be invested in. Traders can, however, invest in instruments that gauge their performance. Finally, shares or stocks are a means for companies to raise capital money by selling investors a percentage of that company. But we don't actually have to buy shares. Instead, we can invest in a stock CFD, a contract for difference. When the contract expires, the stock's value will be higher than when you invested in it or lower. All of these and more are financial instruments. Instruments we use in order to invest in financial markets.